What if I told you that the biggest reason most people fail at trading has nothing to do with their strategy, their broker, or even the markets? What if the real reason lies within you? You open your charts, you spot a setup, your heart rate quickens. You think, this could be the one. You enter the trade. Minutes later, it moves against you. Panic, you move your stop. It goes further. You add to your position. You're no longer trading, you're gambling. This is where Dr. Alexander Elder begins his brutal but honest diagnosis. In Trading for a Living, Elder makes one thing excruciatingly clear. Most people who enter trading are gamblers in disguise. They may dress it up in jargon, support and resistance, momentum, technical edge, but when you dig deeper, you find erratic behavior, emotional decisions, and zero structure. Elder's first warning is simple. If you don't know who you are, the market will teach you. Harshly. The line that echoes throughout the book is this: amateurs look for the next winning trade. Professionals look for a system. If you're showing up to the market trying to win instead of trying to follow a process, you've already lost. Trading attracts smart people, but it keeps breaking them. Why? Because intelligence doesn't protect you from emotional reactions. You might be brilliant, analytical, and disciplined in other parts of life, but put real money on the line, and suddenly you're chasing losses, deleting stop losses, revenge trading, acting like a complete stranger to yourself. Elder describes the market as the world's best psychologist. It exposes your impulses, your fear, your greed. And if you don't take this seriously, the market will keep charging you tuition. The dream of financial freedom quickly turns into a recurring nightmare. Elder doesn't say this to scare you. He says it to wake you up. You've probably already experienced it. The setup that looked perfect, the exit you ignored, the small loss that ballooned into a catastrophe. These aren't accidents. They are symptoms. And if you don't get brutally honest with yourself, they will become patterns. Here's the real question Elder wants you to answer. Are you serious about trading? Or are you still looking for excitement? Because if it's excitement you want, the market will gladly give it to you and take your money in return. Let's be real. Most people treat trading like a casino, but dress it up like a business. Elder shreds this illusion. He makes it clear that unless you operate like a professional, with rules, boundaries, and a system, you're not trading. You're entertaining your impulses. He challenges you to look at your motivations. Are you here to make money or to prove something? Are you chasing the rush or building a process? Because until you get clear on this, nothing else you learn will matter. Not indicators, not strategies, not even risk management. All of that crumbles without clarity of purpose. This first part of the book serves as your mirror. It reflects back the hidden motivations that drive most traders to financial ruin. Elder doesn't coddle, he exposes. He makes you feel the discomfort of your past mistakes because that's what creates change. And maybe you've already lost money. Maybe you felt the pain of breaking your own rules, the shame of hiding trades from loved ones, the guilt of losing control. Elder doesn't condemn you. He relates to you. He's been there. He's seen it in hundreds of students and clients. But here's the shift. Awareness is the first step toward transformation. You can't change what you won't admit. Elder's mission is to push you to that edge, to the place where you finally say, enough. I don't want to be another casualty. I want to trade for a living. You've got to choose, right now. Are you willing to let go of the illusion? Are you ready to stop treating the market like a slot machine and start treating it like a business? Because in Elder's world, that's where the journey begins, not with charts or capital, but with your mindset. And until you face that truth, nothing else will save you. You're not trying to win every trade. You're building a foundation on 3 core pillars: mind, method, and money. Dr. Elder calls them the essential elements of any successful trader. And if one of them is missing, your trading house will collapse. Let's start with the mind. Without psychological control, even the best strategy is useless. You already know what it feels like to freeze when a trade turns against you, to feel the adrenaline rush during a profit and the crushing dread after a loss. Elder says if you don't master your emotions will master your trades. It's not enough to know the market. You must know yourself. Discipline doesn't come naturally to traders. Most people enter the markets with dreams of freedom, not realizing it demands more structure and self-regulation than almost any job they've ever had. Elder insists that consistent traders are not thrill seekers. They're calm, methodical operators, and that begins in the mind. But mindset alone isn't enough. That's where the second pillar comes in, method. This is your system, your rules, your way of approaching the market that's tested and repeatable. Elder doesn't promise you a magic formula. In fact, he warns you against chasing them. What he gives you is a framework to develop your own method based on logic, observation, and clarity, not prediction. Your method must be robust. It needs clear entries, defined exits, and the ability to adapt to changing market conditions without emotional reactivity. Elder calls this your trading system, but it's more than tools and indicators. It's how you interpret what the market is doing, how you align your actions with your edge, and how you remove guesswork from your process. Then comes the third pillar, money, risk management, capital preservation, survival. Elder hammers this home. Your most important job as a trader is to protect your capital. Without it, you're out of the game. He outlines the infamous 2% rule. You never risk more than 2% of your equity on a single trade. Why? Because trading is a game of probability, not certainty. And if your method has an edge, your job is to survive long enough for that edge to play out. So, what happens when all three pillars are aligned? That's when you begin trading like a professional. You stop reacting emotionally. You stop making impulsive bets. You start acting in accordance with your plan, your system, your rules. You become the house, not the gambler. But here's the catch. Most traders only develop one or two pillars. Some focus obsessively on psychology, but never build a real method. Others chase perfect systems and ignore the emotional storms. Some manage risk mechanically, but fall apart when things go wrong. Elder's message is crystal clear. If even one leg is missing, the table tips. He uses a metaphor you won't forget. Trading without one of the pillars is like flying a plane with a broken wing. You might stay airborne for a bit, but you will crash. So how do you build all three? Elder starts with awareness. You have to know where you're strong and where you're weak. Ask yourself, do I panic under pressure? Do I trade without a tested system? Do I ignore my risk rules when I feel sure about a setup? Then you take action. Journal your trades to reveal your psychology. Backtest your method to confirm its validity. Set clear, non-negotiable risk parameters. And if any of those steps feel unnecessary or boring, that's your red flag. That's the part of you that still wants to gamble. Real traders operate like professionals. They don't need excitement. They need execution. They know that profits are a byproduct of consistency, not cleverness. So you must ask, which pillar are you neglecting right now? Mind, method, money? Because the only way to trade for a living is to strengthen all three. This section forces you to step back from your charts and look inward. It challenges you to audit your foundation. It demands that you treat trading not as a hustle or a side gig, but as a serious profession. Elder's voice here is firm. You cannot build a career on luck, emotion, or randomness. You build it on a structure of discipline, logic, and control. And that structure starts with the 3 M's: mind, method, and money. Get those wrong, and everything else will fail. Get them right, and trading becomes more than possible. It becomes sustainable. Have you ever broken your trading plan because of a red candle? You told yourself it was just a small deviation, a gut feeling, a moment of intuition. But what it really was sabotage. Dr. Elder doesn't pull punches when it comes to psychology. He calls out the voices in your head, the inner child, the gambler, the control freak, and shows you how they silently dictate your decisions. This part of trading for a living dives deep into the battlefield of the mind, where the real war is fought. You're not just fighting the market, you're fighting yourself. Think about it. You plan a trade, wait patiently, and execute it. Then, one tick against you and fear takes over. You tighten your stop or jump out too early. Or worse, price moves in your favor, and now greed whispers, "Let it run," even though your plan told you exactly where to take profit. You're not trading anymore. You're reacting. Elder says this reactive state is what destroys most traders. He identifies 2 core emotions, fear and greed, as the most dangerous market indicators. Not on the chart, but in your mind. They distort your judgment, blur your rules, and make you believe you're acting rationally when you're really just trying to feel good. This section of the book focuses on emotional control and mental discipline. Elder doesn't talk in vague self-help terms. He's clinical. He explains that poor trading behavior often mimics addiction. You get hooked on the rush, the noise, the possibility of a quick win. And just like addicts, traders justify self-destructive behavior with fantasy. So how do you break this cycle? First, Elder teaches you to observe yourself, not just your trades, but your thoughts and impulses. He insists that trading success requires emotional self-awareness. You must become the witness of your behavior, not the slave of it. This means recognizing emotional triggers. Maybe you overtrade after a loss or double your size after a win. Maybe you chase breakouts because you're afraid of missing out or exit too early because you've been burned before. Each of these behaviors has a psychological root. Elder's job is to help you dig it out. He introduces the idea of the inner crowd, a concept borrowed from crowd psychology but turned inward. Your decisions are rarely unified. Instead, they're the result of multiple competing voices within you. The disciplined adult wants to follow the plan, but the impulsive teenager wants to make money now. The anxious child wants to avoid pain at all costs. Your job? Become the leader of your own inner crowd. This requires journaling, not just trades, but thoughts. Elder suggests keeping a record of how you feel before, during, and after each trade. Over time, patterns emerge. You'll see how certain moods lead to certain mistakes, and once you see the pattern, you can interrupt it. One of Elder's key insights is this: you cannot eliminate emotion from trading, but you can stop it from controlling you. That's your goal, not to become a robot, but to build habits that override emotion. He recommends rituals, a pre-market routine that grounds you, a set of questions you ask before entering a trade, a rule that you must take a 5-minute break after closing any position, win or lose. These might seem small, but they're powerful. They create structure, and structure is the antidote to chaos. If this sounds familiar, it's because similar themes show up in other trading psychology greats: Mark Douglas's Trading in the Zone, Brett Steenbarger's The Psychology of Trading, Jared Tendler's The Mental Game of Trading. They all agree, your brain is your biggest edge or your biggest enemy. Elder's approach, however, is uniquely grounded in clinical psychology. This isn't just motivation, it's diagnosis and prescription. He warns you not to ignore these insights, because while a flawed entry might cost you a small loss, a flawed mindset will cost you your entire account eventually. And the tragedy? You'll think it was bad luck. It wasn't. It was fear. It was greed. It was ego. And it was all preventable if you had the courage to face it. So here's your action. Audit your emotions. Track your thoughts. Build mental rules as strictly as you build trading rules. Stop pretending psychology is optional. Elder makes it clear it is the first system you must master. Because until you win the battle in your mind, the market will keep beating you, no matter how good your analysis is. Your job isn't to predict the market, it's to read it. That's what Elder drives home when he introduces technical analysis not as a fortune-telling tool, but as a behavioral map of the crowd. He strips the mysticism away from charting and repositions it as a psychological X-ray of human behavior. Most traders look at charts hoping to catch the next big move. But Elder wants you to see something deeper. Every candle, every bar, every swing is a manifestation of collective emotion. Fear, hope, greed, they all leave footprints on the chart. And when you learn to read them objectively, you stop reacting and start responding. Technical analysis, according to Elder, is not about prediction. It's about probability. A chart doesn't tell you what will happen. It tells you what has happened and what that might mean. He reminds you, the market doesn't know you exist. It's not out to get you. It's just reacting to pressure from all sides. Your job is to interpret that pressure, not fantasize about direction. So, how does Elder approach charting? He starts with the basics, bars, candles, and volume, but then adds the layer most traders ignore: context. You're not reading isolated patterns. You're reading them within market environments. Trends matter. Support and resistance matter. Volume matters. But only when you read them as expressions of crowd psychology. Take volume, for instance. Elder explains that rising volume in a downtrend might suggest panic selling, a climax that could reverse. Or falling volume during a rally might signal exhaustion. It's not the volume alone, it's what it represents: conviction, hesitation, fear, or euphoria. One of his most powerful teachings is that charts are never neutral. They're either telling you to act or to wait. And waiting is a decision too, one that most traders ignore because they crave action. Elder says, if you can't sit out a market that doesn't match your system, you're not trading, you're chasing. This is where Elder's method overlaps with professional mindset training. Think of Steve Ward's high-performance trading, where he emphasizes patience and discipline in high-pressure situations. Elder echoes this in how he reads charts, not by jumping at every setup, but by qualifying every potential trade with context and confirmation. He's also adamant that you need to specialize. Too many traders hop between indicators and patterns, confusing themselves in the process. Elder insists you pick a set of tools, master them, and filter everything else out. His philosophy? Depth over breadth. You don't need more tools, you need better judgment. To that end, he focuses on classic chart structures, trends, consolidations, breakouts, and pullbacks. Each has its psychology. A breakout isn't just a line crossing, it's a stampede of traders abandoning their doubts. A pullback isn't just a retracement, it's a test of belief in the trend. Elder helps you decode what's really happening behind the shapes. He also warns against trading based on hope. Hope is not a strategy. You don't enter because something looks good. You enter because your system tells you the setup meets all criteria, and the chart confirms it. Without confirmation, you're speculating. With it, you're calculating risk-reward based on behavior, not emotion. This part of the book teaches you to think in terms of pressure, sentiment, and crowd movement. It's not about magic lines, it's about logic. You're stepping into a marketplace of opinions, and every candle is a vote. Elder teaches you how to read the votes without bias. He even challenges some common technical assumptions. Not every double top means reversal. Not every trendline break is a crash. Context is king. And this is where many traders go wrong. They memorize patterns, but never study the environment those patterns exist in. In practice, Elder's approach turns charting into a disciplined observation skill. You become an analyst, not a guesser. You don't forecast, you listen. You watch. And only when everything aligns, your system, your signals, and the market structure, do you act. So ask yourself, are you using charts as a compass or a crutch? Are you reacting to shapes or interpreting meaning? Elder's technical analysis chapter challenges you to stop playing chart games and start treating chart reading as behavioral science. Because that's what it is, a map of fear and greed. And if you learn to read it like Elder does, you stop following the crowd and start understanding it. Forget the clutter. If you've ever loaded a chart with a dozen indicators, only to feel more confused, you're not alone. Elder has seen it all before. Traders drowning in data, paralyzed by contradiction, sabotaged by noise. His approach? Simplify, clarify, and rely only on tools that speak to market psychology. Dr. Elder's indicator toolbox is refined to a few select instruments that provide insight, not illusion. At the core are the MACD and the Force Index, two tools he champions not for their complexity, but for their ability to reveal the unseen. These indicators aren't about magic signals. They're about confirming what price is already whispering. Start with the MACD. Elder teaches you not to treat it as a simple buy-sell machine, but as a way to gauge momentum, divergence, and trend structure. It's about behavior. When the MACD diverges from price, it tells you the current trend may be losing steam. Not that it will reverse, but that something beneath the surface is shifting. That's the key theme. Nothing in Elder's indicator philosophy is deterministic. It's probabilistic. The MACD helps you detect changes in the emotional temperature of the market. A slowing MACD in an uptrend may signal that the bulls are growing tired, even before price confirms it. Then there's the Force Index. This is Elder's own creation, a brilliant synthesis of price movement, direction, and volume. It tells you how much force is behind a move. For example, a rally with weak volume isn't forceful, it's fragile. A drop with strong volume and large candles? That's fear-driven, powerful. The Force Index translates psychology into measurable momentum. But he doesn't stop at indicators. Elder teaches you to layer them. He emphasizes that one indicator should never dictate a trade. It must be read in context and in combination. For instance, if the MACD shows bullish divergence, the force index confirms strong buying pressure and price breaks resistance. That's alignment. That's a signal. This approach is a major upgrade from the scattershot methods many traders use, throwing on RSI, Bollinger Bands, stochastics, hoping one agrees with their bias. Elder's method is intentional. He treats indicators like instruments in an orchestra. They must harmonize or be discarded. He even recommends building a checklist. Before every trade, ask, does price agree with the indicator? Is there a divergence that adds confluence? Is volume supporting the story? You don't trade based on what you feel. You trade based on evidence. This structured approach is echoed by authors like Mike Bellafiore, who preach process over intuition. But Elder adds a unique psychological lens. He makes it clear that every indicator must help you answer one question. What are other traders feeling right now? He discredits indicator addiction, the belief that the next custom oscillator will finally unlock profits. He calls it what it is, procrastination. If you're constantly searching for better tools instead of mastering a few, you're not serious. You're avoiding the real work, discipline, journaling, and decision-making under pressure. One underrated insight Elder provides is to look for failure of confirmation. For example, if price makes a new high, but the MACD doesn't, that's not a green light. It's a red flag. It shows divergence between what traders are doing and what they're feeling. These subtle cues, Elder argues, are often more powerful than any breakout signal. He also teaches you how to avoid indicator overlap. Many traders mistakenly combine multiple indicators that do the same thing, like MACD, RSI, and stochastic, all measuring momentum. Elder's advice: one momentum indicator, one volume-based, and one trend-based. Clean, cohesive, clear. This streamlining of tools is liberating. It frees you from the chaos of second-guessing. Instead, you start developing fluency in your chosen indicators. You begin to read them like a language. And over time, that fluency translates into confidence. Not arrogance, but conviction backed by process. So now ask yourself, is your chart a reflection of clarity or confusion? Are your indicators confirming your analysis, or are they just feeding your hope? Elder's message is unmistakable. Indicators are not the answer. They're just one part of the process. The real answer lies in how you use them. Consistently, confidently, calmly. Because the moment you stop chasing the next holy grail and start mastering the tools that matter, that's when you stop gambling and start trading for a living. You've been told to stick to your time frame, but what if that's the very thing sabotaging you? Dr. Elder turns this outdated advice on its head with one of his most groundbreaking contributions to trading strategy, the triple screen system. The truth is, markets are multidimensional. A trend on a daily chart might be a correction on the weekly. A breakout on the 1-hour chart could be a bull trap when seen from above. Most traders zoom into one screen, lock in emotionally, and make decisions based on incomplete data. Elder teaches you to zoom out, zoom in, and align your entries with the bigger picture. The triple screen system operates like this. First, identify the primary trend on a long-term chart, usually a weekly time frame. This isn't for entry signals, it's for orientation. Are you trading in the direction of the dominant pressure? If not, you're already at a disadvantage. Elder warns, trading against the higher time frame trend is like swimming upstream. You might make progress, but the current is always working against you. Once the long-term trend is identified, move to the intermediate time frame, like the daily chart. This is where you look for a counter-trend move, a retracement, a pullback, some kind of temporary opposition to the major flow. Why? Because this creates your setup zone, the place where high-probability trades emerge. Finally, on the short-term chart, say the hourly, you look for precise entries. This is where Elder uses tools like MACD and the force index to time the trade. The result? A layered, systematic approach that ensures your entries are supported by momentum, direction, and timing. But more than just technique, the triple screen system is a discipline builder. It forces you to wait for alignment, no rushing into trades because of FOMO, no random entries because of hunches. Every trade must pass through 3 filters. If it doesn't, you don't take it. This discipline is what separates gamblers from traders. You stop reacting to every candle, and you start filtering information. You're not confused by conflicting signals anymore, because you know which screen answers which question. The long-term chart tells you the trend. The intermediate chart finds the setup. The short-term chart gives you the trigger. Compare this to how most traders operate, bouncing between timeframes without a plan, trying to feel the right moment. Elder exposes this as emotional trading masked as analysis. Without a system like triple screen, you're not building a trade. You're building excuses. And it's not just about direction. The system helps with confidence. Imagine entering a trade where the weekly trend is rising, the daily chart shows a pullback, and the hourly gives you a bullish MACD crossover. You're not guessing, you're aligning. Elder also offers a critical lesson here. You're not supposed to find trades every day. The triple screen filters most setups out. That's its job. Trading less means you're making better choices. The goal isn't to be in the market constantly. It's to enter when everything aligns. This strategy reflects a mindset shift echoed by other elite traders. Brett Steenbarger talks about aligning timeframes for emotional regulation. Mike Bellafiore trains his traders to stack the edge. Elder's system is the structural version of that edge stacking, 3 layers deep. Another benefit? The system prevents you from fighting the market. When you're emotionally tempted to short a rally or catch a falling knife, the triple screen gives you a reality check. What's the weekly doing? Where's the pressure? You can't lie to yourself when your process requires verification. But perhaps the most profound lesson in this section is about patience. The triple screen teaches you to wait for the market to come to you. Most traders chase. Elder's students prepare. And that's the difference between stress and confidence. So now ask yourself, are you entering trades in isolation, or are you filtering through multiple perspectives? Are you letting the market guide you, or are you trying to impose your will? Because once you adopt the triple screen system, you stop playing a one-dimensional game. You start thinking like a strategist, not a scalper hoping for a miracle. And that shift, that's what gets you one step closer to trading for a living. You've studied your charts, your indicators are aligned, and your system says go. But now comes the moment that separates winners from wannabes: execution. Dr. Elder is clear. If you can't pull the trigger with discipline and consistency, everything else falls apart. This is where many traders break. They hesitate, they overthink, or worse, they act impulsively, jumping into trades out of boredom, frustration, or FOMO. Elder calls these traders system ignorers, people who do the work but throw it away at the moment of truth. Execution is not a spontaneous decision. It's a commitment to your plan. So what defines a valid trade? According to Elder, 3 things must be present: a setup, a signal, and a confirmation. A setup is a condition in the market that aligns with your trading strategy, a pullback in a trend, a divergence, or a breakout. A signal is an alert from your indicator or price pattern. But the confirmation? That's the most critical. It's where the higher time frames, your risk rules, and your conviction all align. If any of these are missing, Elder says you're not executing a trade, you're placing a bet. He's ruthless about this distinction. Execution without process is gambling. With process, it's professionalism. Elder also emphasizes the importance of a pre-flight checklist. Before every trade, you ask, is this trade in the direction of the main trend? Are indicators confirming? Is volume supportive? What's my entry, stop, and target? If you can't answer these without hesitation, step back. You're not ready. But Elder goes deeper. He talks about the psychology of clicking the button. When you enter a trade, your identity is at stake. Your beliefs about success, risk, and failure come into play. That's why traders often hesitate or force trades. It's not about the market. It's about validation. This is why execution must be detached from emotion. Elder teaches you to enter like a machine, but evaluate like a human. Once the trade is live, your only job is to manage it according to the rules. No tweaking, no justifying, no hoping. He also warns against entry intoxication. This is when traders feel a false sense of achievement just by getting into a trade. You've felt it, the adrenaline, the anticipation. But Elder reminds you, the market doesn't care that you're in. It only cares about who's right. That's why Elder is strict about trade size. He links emotional control directly to position sizing. Too big, and fear creeps in. Too small, and you get careless. The right size makes following the plan easier because the outcome doesn't threaten your psyche. Execution becomes a function of process, not pressure. This aligns with Jared Tendler's insights on performance under stress. Tendler says poor execution isn't a skill problem, it's an emotional problem. Elder shows you how to prevent that problem by simplifying your execution checklist and practicing it like a ritual. But what about missed trades? Elder tackles that too. He says a missed trade is not a failure, it's feedback. Did you hesitate? Did you not trust the system? That's information you log in your journal. Your job isn't to take every trade, it's to take every valid trade. He also cautions against chasing. If you missed your entry, let it go. Chasing a trade that's already moved means abandoning your plan, and one broken rule makes it easier to break the next. This is how trading spirals out of control, not from bad ideas, but from bad execution. The solution? Rigid discipline around trade entry criteria. Elder teaches you to rehearse trades, visualize the setup, the signal, the entry. Get so familiar with your process that hesitation isn't even an option. Execution becomes automatic, precise, unemotional, clean. And if you're thinking this all sounds too robotic, good. That's the point. Elder doesn't want you to trade based on inspiration. He wants you to trade based on reliability. Because when execution becomes boring, your results become consistent. So now, challenge yourself. Can you define exactly what a valid trade looks like? Can you execute without second guessing? Can you let go once the trade is placed? Because in Elder's world, your edge is not just your system, it's your ability to act on it flawlessly. And that's what separates those who dabble from those who trade for a living. Your first job isn't to grow your account, it's to protect it. Dr. Elder drives this point home with precision and urgency. Trading is not about how much you can make, it's about how little you can lose when you're wrong. Because you will be wrong, often. And unless your risk management is airtight, those mistakes will bury you. This is the part of the book where Elder sounds less like a trader and more like a surgeon. Cold, exacting, focused on survival. He introduces his golden rule: never risk more than 2% of your account on a single trade. Not because it's some magic number, but because it keeps you in the game long enough to let your edge work. Think about it. If you risk 10% on one trade, 5 consecutive losses wipe you out by 50%. At 2%, it takes 50 losing trades to do the same damage. The math isn't just protective, it's liberating. Smaller risk reduces emotional stress, which improves clarity, which reinforces discipline. Elder pushes you to understand the compounding cost of large losses. A 50% drawdown requires a 100% gain just to break even, and very few traders recover from that, psychologically or financially. That's why real professionals always prioritize defense over offense. Position sizing is a core tool in Elder's arsenal. He teaches you how to calculate the correct number of shares or contracts based on your risk per trade, your stop-loss distance, and your account size. It's not glamorous, but it's how the pros operate. They don't think in dollars. They think in risk units. He also makes a critical distinction between risk and volatility. Just because a stock moves doesn't mean you're at risk, unless your position is oversized or your stop is irrational. Elder wants you to use average true range, ATR, volatility bands, and historical behavior to place stops logically, not emotionally. And if you think stop losses are optional, Elder gives a chilling reminder. Your stop is your insurance policy. Would you drive without insurance? Most amateurs place stops arbitrarily, or worse, don't use them at all. Then when a trade goes against them, they freeze, hoping it comes back. Elder calls this wishful thinking disguised as patience. So what do professionals do differently? They define their risk before entering the trade. They place stops outside normal volatility zones, not too tight to get shaken out, not too loose to make recovery impossible. They calculate position size after they've defined risk, not the other way around. And if the numbers don't work, they don't take the trade. Elder teaches you how to pre-plan exits, not just stop-loss exits, but profit targets. He urges you to avoid the common trap of letting it run without a plan. Sure, you might catch a bigger move occasionally, but more often, you'll give it all back. Profit targets force you to exit strategically, not emotionally. And if you want to scale into trades, Elder's answer is clear. Only scale if your initial position is profitable. Never average down. That's not risk management. It's a desperate prayer. Professionals build winners. Amateurs double down on losers. He also emphasizes account protection beyond the trade level. He recommends daily loss limits, no more than 6% drawdown in one day, weekly loss caps, cooling off periods after consecutive losses. Why? Because your biggest risk isn't a trade, it's you on tilt. This overlaps perfectly with insights from Mark Douglas and Jared Tendler. Emotional overtrading, revenge setups, and tunnel vision are all symptoms of uncontained risk. Elder's structure prevents that spiral. His rules act like a seatbelt. You don't appreciate them until the crash comes. And by then, it's too late. He tells a sobering truth. Good traders are not those who make the most. They are the ones who lose the least when wrong. That mindset shift is everything. Because if you can minimize the damage when you're off, profits become inevitable when your edge hits. So, are you risking too much? Are you trading without hard stops? Are you thinking in percentages or just dollar signs? Because until you respect risk, not fear it, but respect it, you're not trading. You're gambling with a delay. And Elder's mission is to make sure you survive long enough to thrive. What if I told you that the most powerful tool in your trading arsenal isn't an indicator or a chart? It's a journal? Not the kind that collects dust on your desktop, but a living, breathing mirror that reflects your decisions, your emotions, and your patterns. Dr. Elder makes this crystal clear. If you're not journaling your trades, you're flying blind. You're not learning. You're not improving. You're repeating the same mistakes and calling it experience. This section of Trading for a Living elevates journaling from an afterthought to a non-negotiable discipline. Elder doesn't romanticize it. He makes it functional, practical, essential. Why? Because memory lies. You think you followed your rules, but the data says otherwise. You believe your edge works, but your journal reveals you've been trading based on impulse. Without records, you're just guessing. Elder says, you can't manage what you don't measure. So what should your trading journal include? Not just the obvious, entry, exit, stop loss, size, result, but your mindset before the trade, your reasons for entering, your emotional state during the trade, whether you followed your rules, and most importantly, what you'll do differently next time. Elder wants you to review every trade like a coach watching game film. Did you execute your plan, or did fear hijack your exit? Did you size appropriately, or did overconfidence sneak in after 3 wins in a row? He encourages you to track context, not just outcome. A trade that loses money but followed your plan perfectly? That's a win. A trade that made money but broke all your rules? That's a loss. The journal teaches you to separate process from result, one of the most difficult yet vital mental shifts a trader can make. This aligns perfectly with insights from Mark Douglas's Trading in the Zone. A consistently profitable trader is not trying to be right on every trade. They're trying to execute their edge flawlessly. And the journal is where that execution gets audited. Elder also breaks journaling into 2 levels. The first is the technical, price, indicators, timeframes, result. The second is psychological, mood, confidence level, stress, mental chatter. Over time, you'll see patterns that have nothing to do with the market and everything to do with you. For example, you might discover you lose most on Mondays when you're rushed, or after a big win, you overtrade and give it back. These aren't technical issues. They're behavioral, and they won't change until you see them. And here's the kicker. Elder doesn't just suggest you write things down. He wants you to analyze them. Monthly reviews, performance reports, categorizing mistakes. He even recommends printing your charts and writing notes by hand. Why? Because the physical act of documenting behavior imprints lessons deeper than screen staring ever could. This is where most traders fail. They treat the journal like a chore, a formality. But Elder flips that. He says the journal is where the real trading happens. The chart is just execution. The journal is where you uncover the trader behind the trades. He introduces a phrase that should stick with you. Your journal is your mentor. It's the only feedback loop that's unbiased, always available, and brutally honest. The market doesn't care if you improve. Your journal does. Elder also warns about journaling only the good trades. This creates a highlight reel, not a diagnostic tool. You must include the ugly trades, the mistakes, the I knew better entries. That's where the gold is. That's where growth hides. And yes, it's uncomfortable, but Elder reminds you, trading is a business. What business doesn't track performance? What professional ignores their numbers? If you want to treat trading like a career, you have to adopt professional habits. Journaling is the habit that transforms amateurs into pros. It builds self awareness. It holds you accountable. It reveals the edge killers, hesitation, overconfidence, boredom that no indicator can detect. So here's your challenge: commit to documenting every trade for the next 30 days. Not just the data, but your thoughts, feelings, reactions. Create templates, color code setups, score your execution. Because once you start trading with a journal, you stop guessing, you start learning, and you finally begin to understand the person making the decisions, you. And that self-awareness, that's what leads to mastery. Hobby. It's not a weekend project, and it's definitely not a lottery ticket. If you want to trade for a living, Dr. Elder says you must become a professional, not in title, but in behavior. This final section of Trading for a Living is about identity. Who are you when you sit in front of your screens? Are you consistent, composed, committed, or are you still chasing, reacting, and hoping? Elder outlines the habits and routines that define a real trader. The first, structure. Professionals don't wake up and wing it. They follow a routine, daily, weekly, monthly. They prepare, they review. They treat trading like any other high-performance endeavor, because it is. You start your day with a pre-market checklist. What's the market doing? What's your plan? What's your mindset? Elder urges you to set a tone of calm and control before a single trade is placed. Emotional regulation doesn't happen in the moment. It's built through consistent preparation. This is where Elder separates the dreamers from the doers. Amateurs are reactive. Pros are proactive. They build systems, follow them, and evaluate them relentlessly. Their consistency isn't glamorous, but it's profitable. He introduces the concept of mental hygiene. Just like brushing your teeth, you clean your mental state before and after every trading session. You note your emotional energy. You clear distractions. You debrief each day. This is not fluff, it's maintenance. Because trading is a performance sport and your mind is the athlete. Elder also emphasizes the importance of downtime. Yes, rest. Professionals don't trade all the time. They know when to walk away, when to pause, when to step back and recalibrate. Trading fatigue is real, and when it sets in, so do errors. So does recklessness. He warns of the burnout loop, where traders overtrade to recover losses, then break rules to accelerate recovery, only to lose more and spiral deeper. Pros prevent this with boundaries. They set daily loss limits, time of day filters, and emotional red flags. And when they hit those triggers, they stop. No exceptions. Another crucial habit Elder drills into you is reflection. Weekly trade reviews, monthly performance summaries, not just to track numbers, but to assess behavior. Did you follow your system? Did you improve a weakness? Did you ignore a red flag? Professionals grow by design, not by default. He compares trading mastery to martial arts. You don't win by being flashy. You win through discipline, routine, and constant refinement. Elder says, a trader without discipline is like a samurai without a sword. You might look the part, but you're powerless when tested. He also touches on goals, but not the kind you might expect. He doesn't tell you to set profit targets. He tells you to set process goals. Execute 20 trades flawlessly. Journal every setup for a month. Follow your plan without deviation. These are the goals that compound over time into real skill. And that's Elder's final message. Mastery isn't a finish line. It's a path. You don't arrive as a trader. You evolve through structure, through awareness, through relentless refinement of behavior. So what does it mean to trade for a living? It means waking up every day with a plan, executing it with discipline, and reviewing it with honesty. It means protecting your capital, managing your emotions, and building your edge like a craftsman, not a gambler. It means becoming the kind of person who can survive the storms, ignore the noise, and stay centered no matter what the market throws at you. Because the truth is, the market doesn't reward brilliance. It rewards consistency. It rewards behavior. It rewards those who treat trading not as a way to get rich, but as a profession to be respected. So now ask yourself, are you ready to become that person? Are you willing to build those habits, face those truths, and earn your seat at the table? Because trading for a living isn't a theory, it's a transformation. You started this journey wondering why trading feels so difficult, why success seems elusive even when you study hard, follow strategies, and do everything the books say. Trading for a Living by Dr. Alexander Elder doesn't sugarcoat the answer. It shows you, piece by piece, that trading is not about luck, prediction, or even intelligence. It's about behavior, systems, and discipline. You learned how most traders approach the markets emotionally, treating it like a casino when it demands the rigor of a business. You uncovered Elder's 3 foundational pillars, mind, method, and money, and saw how failure in any one of them can ruin all the rest. You examined your mindset and discovered how fear, greed, and ego silently sabotage your trades. Then, you saw how technical analysis, when properly understood, becomes a lens into crowd psychology, not a prediction tool. You mastered indicators not for their signals, but for their synergy, how MACD and the Force Index translate market energy into actionable insight. Then, the triple screen system taught you to align timeframes and trade with the trend, not against it. Elder took you into the high-pressure world of execution and showed you how rules, not intuition, deliver results. And if you want to stay in the game, Elder's risk management principles, position sizing, stop placement, capital preservation, are your lifeline. But the real transformation came when you understood the value of a journal. Because once you begin tracking your behavior, you start correcting it. And finally, you saw what it means to be a professional. Structured, self-aware, disciplined. A trader not chasing thrill, but mastering craft. So here's your call to action. If you haven't read Elder's Trading for a Living, start with the first 3 chapters. Reflect deeply. Don't just highlight, apply. Set up your journal. Audit your trades. Implement the 2% rule. Build your trading day like a ritual. This isn't about becoming perfect. It's about becoming consistent. If this content woke you up, like, comment, and subscribe. Share your thoughts below. What was your biggest insight? What are you going to change starting today? And remember, the market will always test you. But with Elder's principles, you're not just guessing anymore. You're trading for a living.